All right, hello, everyone. Happy Monday. Welcome to this weekly market check-in here with myself, Greta Wall, I'm your host, and I'm joined by Derrick Oldensmith. Derrick is the leader of T3 Live's ProDesk virtual trading floor and a professional prop trader with T3 Trading Group. Hi, Derrick. Happy Monday. Let's quickly take a look at the positions Derrick is currently in as of just a couple minutes ago this morning. You can see what he is long and short and what he's already got flat on for the day. Derrick, our topic of the day is that it is CPI week, so inflation is in focus. But first, how is your Monday going so far in the market?
It's going a little bit slower today. The market is incredibly strong. The S&P is up 0.5%. The Qs are up over a percentage point while we're having this conversation right now. The Russell's up a little bit smaller. So we're being led higher today by the Qs. Specifically, we're being led higher today by semiconductor names. NVIDIA is having an incredible day. It's back above the really important 127 to 130 zone. It's into a huge gap now from the DeepSeek situation when that came out. But you also have like Intel's up 4% today and AMD's up 3% today. So it seems like semiconductors are really leading the Qs higher, which is what's leading the market higher. And there's not a tremendous amount of participation outside of the semiconductors from what I'm seeing.
Yeah. Yep. All right. Let's talk about some of the data that's coming up this week, and maybe you'll get a little bit more of a catalyst for some broader market moves when this comes out. CPI is coming up on Wednesday. I know we have Powell speaking, I think, tomorrow on Tuesday. Also, then look at the PPI also, and then I think the retail sales end out the week. So it's all about inflation, prices, all of that. As a trader, do you feel like this inflation report matters more or less, kind of neutral to the market as previous reports?
All inflation reports matter now. I mean, we just saw, I think it was on Friday, the University of Michigan inflation survey come out and have a big impact on markets. And that one always surprises me, the degree of the impact on it, because it's literally a survey, and surveys are, in my opinion, kind of stupid because, I mean, I don't know, Greta, when's the last time you gave someone the time of the day who called you up and said, hey, do you have time to take my survey?
Yeah, that's very true.
I don't know about you, but
polling, right?
Yeah, exactly. I don't do that very often. Yet those surveys at University of Michigan seems to really move the market. So that's kind of maybe just a preview of the importance of inflation numbers still. So the CPI will be important. It'll be impactful on the market. It could have a big adjustment on our broader picture technicals, and we'll see what that number looks like.
Coming into this Monday session, we, of course, were getting some tariff threats and news over the weekend, but this Monday open being a lot less dramatic than last Monday's open on the tariff news. Do you think the market is already kind of hitting that point of being a little bit just less impacted by these big tariff threats after we saw the last ones, go in and then get paused kind of right away?
Sure. So first of all, I would argue that the
industry
market,
specific.
Yeah, the market at least has always called the bluff from the beginning on any potential tariff announcements that Trump has come out with. If the market wasn't calling the bluff on the 25% on Mexico and Canada, I think it would have been a real disaster. And even with that, we had a pretty decent gap down initially on that Monday morning, but it got bought up, and then lo and behold, as the market told us ahead of time, those tariffs at a minimum got delayed, and then the market was able to immediately bounce back. What I've really started to learn about trading over the course of the last several years is that it's all about market dynamics and flows. And the fact of the matter is, right now, we are in an environment, and we have been really since mid-January, where there's just a tremendously strong underlying bid to this market that's coming from systematic funds, it's coming from CTAs, it's coming from vol control funds, just a huge underlying bid to the market. And we also saw over the course of the last couple of weeks more retail buying than has happened pretty much at any point in history. I think some of the largest data points of retail buying, like I forget what the number is, 5 of 8 or something like that, going back the last 10 years, have all come in since in 2025 so far. Retail's buying more right now than they were buying at the heights of the COVID situation, when everybody was locked in at home and was starting to trade stocks, at the height of the meme stock situation with GameStop and everything in late 2020, early 2021, retail sentiment is stronger now than it was in that period as well. So you got retail buying, you got vol control funds buying, you got everybody trying to buy every tiny dip that comes into this market. And that should continue to happen, at least in the short run. So for now, even if you get a little bit of a not so great CPI, there's so many people that are waiting to buy the dip. So the question is, when does the flow potentially change? Well, it helps to get everybody in the pool. And you could make the argument that retail is nearly fully in the pool at this point. I think that the systematics still have more that they can potentially buy. And then once we start getting to mid to late February, so another week or two from now, is really when seasonality begins to change a bit. And this market, historically at least, begins to become more bearish, and you see some outflows into the market. So for the moment, there's just a strong underlying bid that keeps supporting everything and holds this market up. That may change as we get around the February OPEX period. So I've got some concerns for really late February through potentially mid-April at this point, just big picture. But we need a technical signal to happen first. And for now, this market has just been, it's been chop suey. We haven't been able to break out. We haven't been able to break down. I mean, the Qs are the perfect example of that, though we're testing some degree of resistance even today. There's been this big resistance area of this range around 530 plus in the QQQ, this big support zone down at 510. We had 2 Monday gap downs in a row, one off DeepSeek, one off tariffs that tested 510. It continues to hold. But broadly speaking, we've been in a range-bound market for the indexes that can't seem to break in either direction, and we need to wait for the break to get more clarity. I think if we break higher, it's actually going to force in more buying into this market, at least in the short run. But if we aren't able to break higher as time passes, we get towards a period of more seasonal weakness, then I think that there is a chance that this market actually could break down and potentially give us a 10% plus correction. But I'm not going to jump to conclusions until I see some technical support levels break at the index level.
News-wise, besides, inflation reports, jobs reports, tariffs, etc., it is earnings season. We're coming toward the tail end of earnings season, but the big one, NVIDIA's report, is still 2 weeks away. They report so late in the season. I feel like this earnings season has been just kind of meh. Like, not really any huge market moving or sector moving reports. Some individual names for sure getting those big moves. But what's been your read on Q4 earnings season so far?
So I'm glad you brought that up. I didn't have the opportunity to do my team's morning meeting this morning because I was running a little bit late from dropping some friends off at the airport. And this was actually one of the things that I wanted to kind of review, as we've gotten pretty much through all of our Mag 7 earnings reports at this point. Most of them do not look good. The charts of most of these Mag 7 names do not look good for the most part. There's a couple exceptions that are out there, which makes it even especially impressive that the NASDAQ's been able to hold up as well as it has. Let's take a look at a few of them. Apple looks not good. They were able to gap this thing up really big on the earnings report initially because they announced the increase in the dividend and that they're going to be announcing additional buybacks, and they sold that report down. Since then, it's been making a not so great looking consolidation. Friday's candle is also gross. This thing looks like it could break down further, getting through 225, maybe a retest of this 200-day, a retest of 220. Apple does not look good. Microsoft does not look good. Another one, missed on cloud. I think Google missed on cloud, Amazon missed on cloud, Microsoft missed on cloud, gap down really big on the report. This thing is also, Microsoft's been a struggle for a while because it's been so range bound, but now it's testing the lower end of the support zone of that range, which really is everything from like 400 all the way to 410. But after a not good earnings report, huge gap down, it's consolidated that gap down. It also gave a nasty candle on Friday, inside day so far today. This is not a good looking chart. Maybe it holds support, but to me, it looks like it's potentially setting up for a breakdown. Google was one of my favorite names in the market. Google was looking fantastic above $200. built out this beautiful ascending wedge into its earnings report, began to break out, also missed on cloud, gapped it all the way down back to that support zone. Then on Friday, it broke through that support zone. And now today, it's actually consolidating below it. Google does not look good. Amazon, the last one to report, gap down, not the worst looking chart in the world. If this thing can recapture like 234 to 235 pretty quickly. But if this thing breaks through the earnings day low relatively soon with some continuation in the Qs lower, also not looking good. How about on the better side? Meta was a pretty good report. And this thing, even though this was a pretty standout report, it hasn't really been able to continue with momentum. Like, here's the earnings day. You almost can't even tell. It's not even that big of a volume increase on its actual earnings day. A little bit of a doji there. Tested the 80 on a gap down. They did buy it back up. I think that was one of those Monday trading sessions. Has kind of grinded up since then. On Friday, it gave a little bit of a shooting star type of candle. And today, it's been trading pretty poorly, pretty relatively weak. So you can't call us a bearish chart by any means, but I would argue it's almost not as strong as it should be. And then if Friday's high continues to hold now, this could also set up for some downside price action. What else? The AVGO chart, bouncing back pretty well today along with some of these other semis. So this is improving a little bit. If this thing can get above Friday's high, it can get above like 235, 236, this one actually begins to look better as well. But the bottom, and Tesla, how could I forget Tesla? Tesla's like the worst one out there, atrocious. They did initially gap this up on its earnings report because Elon Musk said it's going to be worth more than the next 5 companies combined or some nonsense like that. And then it lost this really important support zone that was around 375. It's holding below that. It's been the weakest one out there. I think Tesla looks atrocious. I wouldn't short it here. It's traded down too much now at this point, but this one's probably also shortable on any real bounce backs to previous levels. So, the bottom line, as I go through pretty much all of these Mag 7 companies that have reported, NVIDIA hasn't reported yet, and it's trading fantastic today, along with some of the other semis. But the bottom line, when I look through them, none of this looks very good. But circling back to what I was talking about market dynamics, the longer I've been trading now, I realize that market dynamics really kind of dictate everything. It's about these forced flows. It's about supply and demand, which traditionally I 100% read in the charts and the technicals, but now we can actually glean data points that tell us about forced buying and forced selling. We are in an environment right now with an increasingly positive gamma again. That'll probably continue to be that way until the next OPEX hits, which usually creates a bit of a gamma roll-off. But has a very insulating effect on the market. That insulating effect on the market creates dispersion. So basically what that means is if there's weakness somewhere, then there's going to be strength somewhere else. So if I can just show you one more chart on here, it would be the QQQ versus the QQQE, which one of the traders on the team mentioned this morning. The QQQ is okay. It's range bound. I wouldn't describe it bearish. I would describe it bullish. I would describe it as neutral. But compare the QQQ versus the QQQE, the equal weighted. This equal weighted chart is actually much better than the QQQ. When's the last time we saw that? I feel like I remember complaining probably to you and to all my traders for like a long time, because it was like the only stocks that go higher are the Magnificent 7 stocks and everything else is crap. And now all of a sudden we find ourselves in an environment where they wrecked down a lot of these Mag 7 names on not so fantastic looking earnings reports. The technicals on those, like we just reviewed, don't look so good either, but they have to buy up something else in order for the market to hold in because the forced buying that's actually there. So that is creating a dispersion effect that actually makes the QQQE look better than the QQQ right now, which is pretty unusual. So, we will obviously see how that materializes. But if we can't break out to new all-time highs, which I think would create some degree of then further forced buying that comes in, and we get into this period of seasonal weakness that I was just discussing that starts, for the back half of February, then so this is an if-then statement, which is how I like to approach markets, because if the if doesn't happen, then the then doesn't happen. But if we get into that weaker period where we begin to see outflows, and that forces Microsoft to break through the support level that I was just talking about, that forces Apple to break down through the support levels I was talking about, then you actually might get a period of time where correlations increase again. We know that historically correlations increase on the downside of the market. So if we can hit a period of time here where volatility can increase, these stocks are breaking support levels, then I think you'll lose not just Mag 7, but you'll lose that QQQE also. And then that could be the catalyst that creates that deeper correction that I was just discussing. But that only happens if we can actually break through the support levels that I mentioned. So just really, really important right now for traders to know their index level support and resistance zones, and how a break in either direction can feed on each other. It can feed on each other to the upside. It can feed on each other to the downside. And until that happens, it's just continued chop.
A majority of those Mag 7 names, like you mentioned, have been, lower on bad cloud news was kind of like the theme across most of them. What has gone up off those earnings, most of those earnings reports, is NVIDIA on the CapEx, the spending, the AI spending from Microsoft and Meta and Google, all of them. You see these reports, you see this big CapEx number come out, and they're like, yeah, we're going to keep spending on AI, and for them that's a lot of expenditure, but for NVIDIA it's like, well, they need NVIDIA chips, so it's good news for NVIDIA. Looking there at the NVIDIA chart, we still are 2 weeks away from the report, but do all of these have a read-through for you on how the market could react to NVIDIA's report?
Sure. So NVIDIA is the most important company in the universe, probably still. And it's the one major report we seem to be missing. The technicals look much, much better on NVIDIA with this relative strength that it's giving today. It looks much better holding above 130 than it was when it was losing those really key levels. So we'll see how that goes. You still have all of, like you just said, these Mag 7 companies that are investing in AI, the ones that are doing it, Meta, Google, Amazon, talking about their CapEx spending, and that's obviously key for NVIDIA. The real question for me still that's making me a little bit more of a NVIDIA skeptic right now, the technicals are the most important thing, and like I just said, the technicals are looking good, is has there been a story change? And that story change comes from a couple different places. One is DeepSeek. And I don't think it matters when we're talking about DeepSeek. I don't think it matters if DeepSeek is telling the truth or not, which has been the big debate. The question is the DeepSeek story creating a possibility that didn't exist previously? And if it does, then that's a story change, right? So I think that stocks are able to move and maintain value based on their fundamental numbers plus the story of the actual stock itself. And I'm pretty sure that when you look at almost any stock that you might say is expensive, then you have to ask yourself, well, what's the story that's creating that expense? And I would argue that that's NVIDIA. So if all of a sudden that story changes, then you could have a little bit of a bigger issue. So we'll see. And then, we saw headlines this morning that OpenAI is looking to start building their own chips to compete with NVIDIA as well. So that sort of competition also changes the story. I mean, similar but different. When you look at Palantir, is Palantir a really expensive stock fundamentally, or is it a stock that just has incredible growth, incredible earnings reports, that's able to continue to beat, where there's a story there where people are willing to pay up for that growth? I think that the answer to both questions is yes. It is expensive, but there is a story there. I mean, that last Palantir earnings report, we're talking about earnings. That last Palantir earnings report, in my opinion, is the earnings report of the first quarter of 2025. This has been the biggest, the best report of it. Just so happened for me, I held a short position into it, so that certainly wasn't fun. Luckily, I had sized it down a bit. But even with a sized down position in it, when stock moves 30% against you, it hurts. But I mean, that's how we want to be thinking about markets. It's how we want to be thinking about NVIDIA and Palantir, and we want to do it in combination with the technicals, because the technicals are what tell us the supply and demand picture that make up a combination of the story and the numbers.
You bring up Palantir, and that was our question from YouTube. When will Palantir go to zero? I think this is a topic that has been, a lot of people talking about Palantir, and you should be short because Palantir is so overvalued. And then Palantir continues to just grind higher and higher and higher and hurt all the shorts. I'm going to look at the chart, the gap up, and then we had the little dip, and then just continuing higher and higher and higher. So it's a hard short. And just talk about when you're looking at a stock and you think it's overvalued, that doesn't just make it an easy short because you think it's overvalued.
For sure.
As a trader.
So to directly answer that person's question, when is Palantir going to zero? Probably never.
Never.
I mean, this company has developed a phenomenal business for itself, and it does business with the U.S. government, which certainly has its downsides, but that type of business is also extremely, extremely sticky. When you're doing military contracting for the U.S. government, you're not going to lose that, because let's say, I would love to think, and in the back of my head, I was even thinking we saw this BBAI get a U.S. government contract at some point recently that accelerated this thing higher. And we saw some chatter that OpenAI was going to try to compete with Palantir. And in my head, as someone who's been trying to short Palantir, I'm like, oh, competition. That's great. Let's take some of the money that's going towards Palantir and have it go somewhere else. That'll help me with my short. But think about it. If Palantir has like top secret information that's coming from the U.S. government, and another company comes along and offers them a better deal where they're going to be able to save a little bit of money, you think that the U.S. government really cares about how much money they're spending? You're going to save me a little bit of money if I go to a competitor, but I've already given all of my secret clearance to top people at Palantir. They're not going to all of a sudden go somewhere else unless it's like very, very, very significant in terms of what those savings were. So that business is just very sticky. With that said, it's trading at whatever 170x forward PE ratio. We did, I think, see Donald Trump announce over the weekend that he wanted to make some cuts to defense spending, which could negatively impact Palantir. But it's like I said, it doesn't really matter what that forward PE multiple is or how crazy that is when they post the best earnings report out of any company in the entire quarter, and there's a growth story behind it, there's a meme story behind it, and that creates this pump. And also, like I was even saying before when I was analyzing QQQ versus QQQE, if the QQQ is staying sideways, but Microsoft and Amazon and Google and Apple are going down, they got to be buying something else in order for the Qs to be able to maintain their value if there's a forced degree of buying. So you're also getting that here as well. Would I buy Palantir at $115? Absolutely and utterly not. Would I short sell it here? Well, I am short it. It is very extended to the upside. I thought maybe you could look to be short versus Friday's high because it gave a little bit of a upside tail there as well. But the stock is once again today holding in incredibly, incredibly well. So the bottom line is you better make sure you have a risk management game plan in place if you're trying to short this and you're wrong. Because I even said it on Thursday when it had this insane upside day. And is it rational in my mind for this thing to be trading at 115 right now? Absolutely, absolutely not. Will I be surprised to see it trade and give a parabolic top into 125 to 150 somewhere? I won't be surprised to see that sort of parabolic top come in at all, because that's how momentum works, especially when there's a good story, especially right now. I think that a lot of those retail people that traditionally might have chased some of the quantum computing stocks, or might have chased a Tesla when it was moving higher and going parabolic, or chased MSTR when it was moving higher and is going parabolic, they don't have anything else to chase right now. There is no spreading out of the money from those people to buy MSTR that's going parabolic, or Tesla to go that's doing it, or when RGTI and all of quantum was doing it. Palantir is like the only one I feel like that's left in that universe. I mean, maybe there's always something that's a one-off, like this BBAI like I mentioned, has been running, and people have still been looking at the OKLOs of the world. But I mean, this has been the area for people to continue to pump in the call option buying, and that creates the gamma squeeze that brings it higher, and then those people are in the money, and then they can continue to roll into higher strike calls, and that pushes the stock even higher. Eventually, that has to fade and fail, which even on the last run up, that did eventually happen. I mean, the earnings season a quarter ago, they gapped it up to 47, and this was a little more of a grind than what we're seeing now. But that grind brought this thing all the way up to $80 before it actually said, okay, we've had enough. And then it went into a multi-month consolidation before this latest round of earnings came in. So hope that helps.
Yeah, good stuff. All right, Derrick, I know you were supposed to be taking some time off last week. Did you take time off away from the market? And how was it for your mental space coming back to the market this week?
I traded every day.
So hard.
I traded every day. I traded every day last week. Yeah, a couple of the days last week I only traded the open, which is one of the benefits of the time zone that I'm in. I was able to trade the open and then still get a full day in with my friends who are out here visiting for the week. I traded every day. It was not great for my mental health because Palantir reported during the course of the week when I was supposedly taking off. I had I had AMD report that I had a small position in. I had Snap report that I had a small position in. So, tough during earnings season. And I managed to, on a vacation week, I think have like one of the worst days, if not the worst day of my entire career on, I think it was Thursday of last week. So it was not a peaceful, restful vacation, but I did get to have some really good skiing. And honestly, that's how I like to do it. I like to be able to be in tune with the markets, but also be able to get a little me time. And that's what I did.
All right, good stuff. All right, so it's Monday. We have the rest of today and 4 more trading days to go this week. What are some of your top ideas that you're focused on for the week? You can look at the charts real quick.
Sure. So for me right now, it's position management. While we're in this range, I don't really want to put a lot of new money to work right now. There's a couple things that are interesting to me, but I'm trying to kind of just be patient. Like I still want to be short Tesla. I don't have that position right now. I'm waiting for a bounce back. I still want to be short MSTR. MSTR, I don't have that position on right now as well. This looks very precarious to me. We got to see if IBIT breaks. I was reading a note this morning. We might see a lot of forced selling from leveraged owners of Bitcoin if this thing really begins to break through. I think it's 93,000 on BTC, and then 90,000 is a huge level as well. That could lead to a feedback cycle of selling that comes into Bitcoin. And I think that MSTR just does that on a multiple on the downside. So I want to be short both these names. I don't have those positions on right now. The biggest thing for me is trying to get through a little bit of time. I want to be more bearish, actually, but I don't think it's the right time to do it yet, and the technicals are not confirming it. So, I'm maintaining the Palantir short on my books in the face of the sub move, because I think at some point I'm going to get some market help on the downside. I did short some Qs today via TQQQ. It's just a cute little trade. There's a good chance I won't keep that overnight. So I'm kind of biding my time here as I'm knowing these important support and resistance levels in the indexes, and I'm waiting to see if we get technical clarity from the market in conjunction with us entering this more bearish seasonal period of time that could allow me to really actually lay into some shorts, just as we potentially get everybody in the pool from the retail world, from the systematic world. It's so interesting to me that we saw so much retail buying on such small dips on those Mondays. What was it, like a 2% down dip that led to some of the largest amount of retail buying that we've ever seen. I'm really curious to see what happens the next time we get a 2% down dip that doesn't get bought up right away. Do those same buyers come immediately back in at a 2% gap down? And then what are they doing when we're then down 5, 6, 7%? Are they then turning around and puking that stock out? Or are they saying, the market and these stocks are at even cheaper prices, I can buy even more? I don't know the answer to that question. It depends on risk tolerance, depends on, is this buying happening at the cash level? Is it happening on margin? Is it possible for margin calls to come in at a certain point? But I do think that we're kind of reaching a little bit of a crux when it comes to positioning here that sets up the risk to the downside, especially if we can get some sort of catalyst. A catalyst will be key if the catalyst happens at the right timing in terms of the positioning and flows. We had 2 catalysts 2 Mondays in a row, especially the second Monday on the tariff one. The market just read through it and said that those tariffs weren't going to happen. But we do have an administration right now that is acting as an agent of change, and that creates for, I think, increased volatility, where you could get a catalyst that actually causes this market to break. And then when that happens, like I said, it could really feed on itself. So that's the biggest thing I'm looking for. I still think that I'm potentially at best 1 to 2 weeks out on that, but I'm monitoring it very closely, and I'm totally prepared to pounce on that for when and if it happens. Beyond that, I still really like the China trade, but it's a little long in the tooth at this point. I liquidated my Alibaba position. It got to my 106 plus target. It was fantastic. I'm also all out of JD at this point. It got to my 42.50 target, so I've been out of this for a little bit over a week. I do still have a yin position on, though I lightened up on that into the gap up this morning. I do still have a tiger position on, though it's not trading as well as some of these other Chinese stocks are. So I'm going to keep that one a little bit tight. But I do like the China trade a little bit, but it needs to reset up. So that's some of the stuff I'm looking at.
All right, good stuff. All right, Derrick, I'll let you go. Derrick is a real trader, so we got to let him get back to trading. But if you would like to get his ebook, you can go to t3live.com/DOLive. Again, this ebook is about the benefits of prop trading. Derrick is a real prop trader with T3 Trading Group, and who you would work with directly on a daily basis if you were to join. So again, go to t3live.com/DOLive to get that free ebook. Next week is a holiday, Derrick, so you will be forced to take a day off from trading, which will be good for you. And so that means we won't be here next Monday. We'll be back in 2 weeks, but have a good long weekend and good week of trading. So a whole week to go, and then a good long weekend with some forced time off. So have a good one.
All right. Thanks, Greta. See you next time.
All right.